Chapter 3, Exercise 2. This is listed as Exercise 3.2 in your book. And it gives us a bunch of information for this company, Jervin Enterprises. They recorded the following transactions for the just completed month. The company had no beginning inventories. Well, that makes life easy. Okay, so that's good. $94,000 in raw materials were purchased for cash. Okay, so we have $94,000. And raw materials, $94,000. And that's transaction A. The next thing they tell us is that $89,000 in those raw materials were withdrawn and used in production. $78,000 was for direct materials, and the remainder was for indirect materials. Okay, so first of all, we have to take out all $89,000. This is transaction B. And this is obviously debits and credits. Now, of that $89,000, $78,000 of it went to work in process. And $11,000 of it went to overhead. So, take a look at the next one. Got that. Total labor wages of $132,000 were incurred and paid. It means cash went down. Of this amount, $112,000 was for direct labor. The rest was for overhead. So, this is what transaction C. $132,000 cash, and that was for direct labor. So we have, from that, we have how much did they tell us? $112,000 went to work in process. And the remaining $20,000 went to overhead. And this is just a matter of just walking through the list. Additional manufacturing overhead costs of $143,000 were incurred. They don't tell us they were on account, so we have to assume that we paid for them. I don't know how you could steal overhead. Manufacturing overhead of $152,000 was applied to production. So that means $152,000 of manufacturing overhead went to work in process. So we have $152,000, and that's transaction E. And that goes to work in process. Then they tell us all of the jobs in process at the end of the month were completed, which means we have to take whatever is in here. What did I just not put down? E. 152. Everything that's in work in process has to come to finished goods. So if you add this up, it adds up to $342,000. So we're going to transfer it all out. to finished goods. That makes that 0. Now, they tell us all of the completed jobs were shipped to customers. So everything went from finished goods to cost of goods sold. And then last but not least, they say any under or over applied overhead is close to cost of goods sold. Well, what we have to do is we have to find out if we have any. If we add this up, it comes to 174. So we had 174,000 of actual overhead expenses. We applied 152. So they tell us we close any over or under applied, and in this case it's under applied, the cost of goods sold. So our last transaction H will be the 22,000 to balance that, and that goes to cost of goods sold. And the last question, it says, what's the adjusted cost of goods sold? That's really saying, can you add these two numbers? And the adjusted cost of goods sold is 364,000. And the adjustment that they're referring to is that, where you close the balance, the over or under applied overhead, to cost of goods sold.